On this episode of the podcast, I have with me Sean Neville. He is co-founder and CEO at Catena Labs, and we're going to be talking about AI and the convergence of AI, especially when it comes to, well, cryptocurrency, blockchain, how agents get paid, a whole lot of things that we're going to talk about. Sean has a background in this space, and we're going to be talking to him about how all this is going to play out and what he is seeing. And I appreciate your time, Sean. Thank you.
Yeah, thanks so much for having me.
Absolutely. Before we start, could you tell everyone what Catena Labs does?
So at Catena, we're building the world's first fully regulated AI native financial institution, which is a mouthful, but what that really means is we're building out the infrastructure that AI actors need to transact safely with accountability, and building out new financial rails that are inclusive of using stablecoins to enable machine-to-machine transactions. So that's what we're building. We're starting at a low level and slowly climbing up that stack.
Awesome. Well, I mean, certainly lots of movement there. And I guess for this episode, we're going to be talking a little bit about how the ecosystem has been moving. And obviously, you have a deep background within the space in terms of fintech, and now we're looking at applying it to AI. I guess maybe to help us set the stage, it'd be great to get a little bit of background in terms of your depth within the space and kind of how you got to Catena.
Sure. So I co-founded Circle back in 2013, which is the company that created the USDC stablecoin, which I architected in 2017, brought to market with a partnership with Coinbase in 2018. I'm still involved with Circle as a board member. Circle company went public earlier this summer in June. So it's been a 12, almost 13-year journey, especially for my co-founder, Jeremy, and myself. My background is in engineering prior to that. But Circle has been 12, 13 years of real time, but in crypto, that's like 130 years. So, it's been a big piece of our lives. Obviously, when you're developing in fintech, it's a little different than developing in other kinds of software industries in that, certainly marketing and sales has a seat at the table, engineering, product, but also so does compliance and risk. Working in a heavily regulated industry is just a little different than working in other kinds of industries. And so, working with all of those elements and innovating within those kinds of constraints, something that we learned a lot about and carried forward, and are applying that now to this new era of AI economics.
Very cool. Very cool. I guess when you're talking about the era of AI economics, I mean, before we kind of get into discussion about agents, I guess talk to us a little bit about when we talk about AI economics, what that really looks like, because maybe not everyone's actually heard the term.
Yeah, I mean, we're entering into this era where the way I think of it is the internet is becoming agent native. It's a big new phase of how we interact with data, content, services online, how we connect to each other, through these AI actors, whether you want to call them an agent or something else. It's this new kind of participant on the web, and that is also inclusive of economic activity. And so increasingly AI actors and AI-enabled workflows are becoming economic participants. And that just means that AI actors are facilitating things like payments, accepting dollars and sending it to another destination, applying some logic, maybe within a spending budget, doing it in a compliant fashion, providing the reporting and auditing and risk scoring that's necessary to facilitate a payment. All of those things now are increasingly involving AI actors. And that's just with payments. There are obviously many other things that become enabled once we have the right financial rails for AI actors to safely execute money flows. Then you can think about things like effects and treasury management and credit and debt and so on and so forth. And that's the direction that we're headed.
I guess when you look at the space and you look at obviously how the technology's evolved, the one concern or the one common theme around AI has been around privacy and trust. I guess in this case, we know the technology is probably very secure. I guess when you think about AI economics, and you touched on agents, getting compensated for work being done. Will there need to be some reconciliation? Like, obviously, lots of micro work happening, lots of small maybe fees, sometimes big fees going around. At some point, there needs to be an audit. You need to be able to trust that those numbers are accurate, and making sure that there's confidence. I guess from that confidence perspective within something like AI economics, what does that look like?
Yeah, I mean, I think it's the big hurdle here that we see is a trust hurdle, and when it comes to clearing that trust hurdle, we keep two things in our minds at the same time as we're working as AI engineers. One is the reality that if I use one of the chatbots, and I'm not going to pick on a particular one because they're all guilty of this at different times. It may make up a terrible recipe when I'm asking for a recipe for chocolate cake. The chatbot can't be accurate about that. So how can it be trusted with my money? And at the same time, you hold in your head, well, this is as worse as it will ever be, and it is increasingly capable at an accelerated rate, the likes of which we have never seen in software and tech development. And it will touch everything. Everything eventually, different things at different points in time, and it will enable us to be more productive. And in the case of economics, it'll increase our reach as businesses, as individuals, and it'll also increase competitive profitability. So you have to kind of hold both the reality and the work that we're doing toward the promise in your head at the same time. And there are approaches to increasing that reliability and trust, especially within specific domains. There are processes to be applied to make it much, much better at, say, risk scoring, or a particular kind of very specific kind of content generation, or whatever the use case may be. And the specific tuning of the workflows to get it really reliable, from 60% good to 99.9% reliable. The process is repeatable, but the specific things that are done are quite use case specific. And they involve things like, well, here for this compliance use case, here's how we're going to think about memory, long-term, short-term, mid-term memory. Here's how we think about injecting data so that these AIs know more about how to solve a problem. And here are the kinds of instructions that we'll give it with the human escalations for certain edge cases. You sort of do all those things and then get subject matter expert alignment with a human that says, this is right, this is wrong, this is right, this is wrong. And eventually you sort of tune this workflow in a way that for a particular use case can be actually very, very reliable, in a way that's just sort of a generalized chatbot will not achieve.
And I guess I appreciate that. That's actually a great explanation. And when you look at what you've done in the space already, now you're talking about AI payments. When you are looking at the underlying technology, what's going to fuel that? What's going to actually, where the transactions actually going to happen?
Yeah, so one of the issues with applying AI workflows, I'm kind of skirting that word agent. We can talk about what an agent is. I mean,
workflows probably, I like the term better. Yes, I agree with you.
Yeah, the joke is, of course, in AI communities, no one can agree on what an agent is. And so we're all, you try to avoid the term, or others try to own it. But at any rate, the difficulty with applying AI actors or AI workflows to the existing financial rails is that you, on the engineering side, you increase the error surface. So you take something like credit card payment rails, multi-party system. Depending on how you break it down, it's anywhere between 4 and 12 parties, which just means the people along the way who get to touch your money before it actually arrives in your account. So there's multiple parties involved. And if you add AI actors along the edges, well, you're just adding 3, 4, or 5 more parties to the mix. And so the error surface is greater, and you're sort of stovepiping on AI orchestrations and workflows onto an existing set of financial rails that was designed for a completely different use case, which was to pass a card to a merchant in a brick and mortar retail store. And obviously that model has transferred fairly successfully, I would say, for the most part, into e-commerce. But it doesn't translate particularly well when we talk about e-commerce or these AI actors being involved in transactions. And one mechanism to make it more reliable and safer is to just cut out the number of participants and have fewer parties that need to see the data and charge you fees for the data and slow down the transmission of the data. And it does turn out that leveraging regulated stablecoins as machine native money are part of that solution. It's not the complete solution. You still have to satisfy compliance obligations and their risk and fraud detection and so on. But as far as the payment flows go, there are fewer actors. It doesn't stop at borders. The fees are minuscule. They're not non-existent, but they're minuscule. Instead of 2.9%, or in the case of remittances, 18 to 23%. They just chop off the money as it flows across borders. You're looking at a few bips in some cases in instant settlement anywhere around the world, and that's very handy for businesses, but also especially when the actors are AI actors and AI workflows.
Obviously it makes sense as we talk about workflows and we talk about finding some type of compensation for these workflows. Obviously, if they're going to be done at a level where there might be a fraction, I don't know to what extent. Obviously, they could be small dollars, it could be little dollars. Obviously, if they're done in stablecoin, we're not talking about dollars. It's a whole different conversation there. But I guess when you look at that component and you look at the ecosystem of workflows, when you think about these integration of workflows, and obviously there could be lots of different handoffs, you can start tracing, the interweaving of these workflows. Will there be a component of, I guess, if a workflow fails and somebody needs to go back and trace it back and somebody needs to unwind a transaction, we got to find out who's culpable? I'm assuming it'll be a little bit simpler if stablecoins are being what's used than if it was a traditional financial mechanism.
It's a great question, because part of the issue with even agent to agent, AI to AI communication is there's really no identity layer there for the agents yet. And this is one of the reasons that we focus so much on this concept of agentic identity. And the simple metaphor that I use is, if you and I go to Amazon.com and we're doing our shopping, we're pretty sure that is actually Amazon that we're talking to, because our web browsers have certificates in them and SSL exists and it runs over HTTP. We didn't have to think about it. It used to be you look for the lock icon and everything, and now it's almost taken for granted that, of course, e-commerce runs on these encrypted rails. And that's built into our web browsers talking to a remote server. And we know it's Amazon. But when we're talking to an agent, or an agent's talking to us, or agents are talking to other agents, how can we be sure it's actually Amazon's agent that we're talking to? Because it's not necessarily a chatbot on Amazon.com that we're talking to. And so these basic communication and identity primitives don't really exist yet. It's particularly across ecosystems. So meaning OpenAI supports the same way Anthropic supports the same way Google or Meta or, Mistral, so on and so forth. There isn't such a standard yet. There's no mechanism for discovery. There's no DNS. So even entering Amazon.com, we know it resolves effectively to a server that has that cert. There's no way to go out and discover agents broadly yet in registries. So we're still early days on some of those primitives, but the identity piece, especially with the question you asked, is very relevant, because in a financial context, you need to be sure that the AI actor is who you think it is, but also that it can be mapped back to a legal entity that is ultimately accountable or liable when an AI actor maybe goes off the rails, or even if it doesn't, if it's a success, there still needs to be an audit trail of that success. And it needs to be mapped back to, in the case of the financial activity, it needs to be mapped back to a licensed entity. Because AI actors can't get fingerprinted and they can't get banking license and they can't be money transmitters. So they need to prove that they are acting on behalf of a licensed entity who is the record holder.
I appreciate that. And I think that makes a lot of sense. And I guess maybe the next question, and if it's out of context, feel free to let me know. But I am curious, as we're talking about obviously making sure that it's the right AI actor, we're talking about these workflows, we're talking about payment system that will be able to accommodate that framework. Obviously, you mentioned an AI agent can't have a bank account. Well, which is an interesting conversation, because as we're seeing the speed of development with AI, there might be a day, I don't know, you know this probably better than I do, that the AI actor might need a bank account. I mean, I don't know where the financial institution, I don't have the depth of knowledge of knowing where the financial institutions sit with this concept, but it sounds like the evolution of AI is at a very fast cycle. Finance and banking doesn't seem to have moved at that speed of development ever since I've been alive. How are we going to reconcile those two? Because, I mean, we have behemoth financial credit card process. I mean, these are massive entities out there. They have business models that obviously are predicated on what has been done. If we're talking about AI and workflows and a financial compensation, there seems to be, there would be some adjustment somewhere. I mean, I don't know to that extent. This is just a curiosity I'm asking you, to be honest with you.
No, it's true. I mean, I think as we're building today, we're very focused on some of these fundamental building blocks and working with others collaboratively to do it. We've released an open source set of patterns and protocols related to just agent identity and basic agentic payments. Anybody can use it for free. It's not a commercial product. It's just building blocks that we need in order to create our commercial products. But ultimately, as we climb that stack, we build on top of those building blocks, then we are creating a licensed FI that is completely implemented with AI actors and AI orchestrated workflows internally. But ultimately, the customers of those accounts and those banking features will also be other AI actors, because AI actors do need a way to custody funds and pay one another, draw them effectively, all within human and business prescribed guardrails and guidelines. So we're not talking about fully autonomous agent, more semi-autonomous, AI actor workflows. But they do need bank accounts in order to be able to be full economic participants, and that is ultimately what we will be building for. Although in the near term, it's building for developers and businesses that they themselves will be deploying their own AI actors. It evolves to a point where AI actors will be able to KYA themselves, so to speak, and sign up for a bank account and be able to negotiate and manage their own on account funds.
I appreciate that. I sometimes you talk about a subject and it's like, you know what, we're still not there, but you could see the framework and the constructs, and you could see where things are headed, and sometimes you wonder where society sits within that. And I guess maybe as a follow-up question to that, right now, like, there's a comfort of humans when there's something wrong, we like to escalate. And I've asked this question from engineering leaders that are using some type of coding AI tool within their stack of how do you identify that accountability? Are the developers getting comfortable with the notion that they're no longer going to know and own the whole code base? I guess with the notion of, workflows and there's AI compensation going between these handshakes, as the user, right, at some point we'll be the user of these. If I'm going to buy something, it'll go do something for me. It'll pay it. It's going to take it out of my bank account. In terms of that comfort level, obviously we're still all early days. I mean, it seems like adoption almost seems inevitable, because once we start using the service, we'll get comfortable. But also, no one wanted to buy books on Amazon, and that was just a tangible book. When you think about adoption and you think about the human adoption and the comfort, is that a concern, or is it more of, if the services are there, people will just get comfortable with the notion of swiping a credit card? This is a different type of a transaction, or is it a case of public will need to understand and comprehend what's happening? Because this is a pretty complex area. That's, I guess, maybe my real concern.
Yeah, absolutely. I mean, I think this gets to what changes first. So you can see the far future, and everything is touched by this, and we're more productive as businesses and business creators and human beings. And, we do believe that ultimately in the future, we will only want to trust AI actors to custody our money and our assets, and it'll be the only competitive way to issue to get a real return on it, to make money on our money in the future. But today, it's not the case. And so what happened? What shoe drops first? Where do we first see things changing and moving into the space where AI actors are participating in the economy in production use cases and not in pilot or experimental use cases? The examples that a lot of people give, and there are some interesting experiments with this. The examples tend to be consumer oriented, and retail shopping. And yet, my belief, based on our research and discussions with partners, is that it's actually much more likely to touch certain business to business flows before it touches consumers. And some of those flows are already becoming automated in highly inefficient places. So it makes sense to automate them. And if you're going to look at automation, well, it makes sense to be able, if you have complicated rules to parse, that's a place where large language models excel. And so, AI actors participating in the workflows makes sense. And if you sort of take one step to the next, then eventually they are executing payments. And you see that in certain, B2B domains. Before I think you'll see it widespread in consumer domains. But also before you see fully AI to AI payments, I think we'll see AI to human payouts first. We're already seeing some of that today. We'll see human to AI pay-ins. The experiences may vary across use case, but if I give my credit card number over the phone to a customer support agent at running my hospital customer support agent, I'm paying the remainder of my bill or something, and it transfers it to an AI, pure AI voice that can take my credit card. That's more of a human to AI pay-in use case. Whether I actually trust that or I ask for a website is a UX and trust related UX question. But I think those cases we'll see before we see true AI to AI payments, and where we do see AI to AI payments emerge first will likely be B2B. Although there'll be experiments in many other domains, as well. I mean, the other thing I would say about the consumer side, even aside from the trust hurdle, is what happens when things go wrong? Who's liable? And the liability right now let's say on the credit card rails is defined, and merchants know they take on a certain liability, and they have certain fees that they're taking on as well, and so on. But what happens when AI guardrails are exceeded? And how do you judge in advance that a particular attempt might exceed the guardrails, which is a new kind of risk vector to score. Existing risk infrastructure is not fully prepared for those sorts of things. And so there's a lot on the consumer side to, I think, clear that trust hurdle, including the user experience. I mean, I just find it difficult to believe, if we have this massive machine intelligence, that chatbots are the final UX for it. I'm not a UX specialist, but I would imagine there's a different surface and different, mechanism. Maybe it's the future of the browser, how we interact with the web in general, how we interact with agents. And there needs to be some development along those lines, I think, before we truly see consumer use cases, sort of rocket ship on AI economics.
Absolutely. Yeah, on that side topic, I did recently interview somebody who's responsible for voice AI. And I think the UI of the future, I don't even know if we're ready to lose, some of the comforts we've had, which is an amazing discussion of itself. But everything you said, obviously, understanding the financial flow and understanding that's been something we've had for 50, 60, 70 years, and people have understood it, where there's a comfort level. I think this is an interesting space, but it does seem inevitable. I was going to ask you a final question, because I am curious of this, and again, if it's not relevant, feel free to let me know. Obviously, a lot of society is now very comfortable with the notion of cryptocurrency. It's spoken about. Everyone knows what Bitcoin is. This is not 20 years ago, 15 years ago, 10 years ago. Does the public awareness of these traded cryptocurrencies, does that help in what you're trying to do? And the reason I'm asking is there's a notion that it's a store of value, it's accumulation. No one really wants to spend any cryptocurrency they buy. Everyone wants to hold it to hold value and appreciate their holdings. Rarely do people go buy anything in Bitcoin, maybe as we heard the pizza story of, a couple dozen years ago. But does that help or does that hurt the notion of what you're doing with stablecoins and AI and AI economics?
So, one of the reasons we created USDC in the first place is because we did just want to have a digital dollar that was not a digital commodity or asset. Well, although those are interesting use cases, what we really wanted to unlock were payment use cases. And that was just digital dollars on public rails. And the belief was, if we could take a dollar, we could put it on multiple blockchains effectively and safely, then we could send it anywhere in the world at practically no fees. And money being just data now, that's just how emails work. There should be no business model in sending money around, because it's just data. It should be as close to free as possible. And so stablecoins, I would say, I would view as a little bit distinct from other elements of crypto. And in particular, with the regulatory policy changes we've seen in the United States, they have achieved a little bit of escape velocity with regard to the rest of crypto in the institutional and some of the more mainstream domains, and that is helpful because it is managing cryptographic keys to sign which chain do I use, which stablecoin do I use. All of these things are difficult for businesses and individuals to sort of grapple with, but they're not difficult for AI actors to grapple with. It's actually fairly native to an AI orchestration to choose the right stable, choose the right regulated. And when we mention stables, it's usually US dollars we're talking about almost exclusively, frankly, at this point. There might be stablecoin effects markets that emerge. We see development of peso coin or won coin or euro, whatever it is. But today it's mostly digital dollars moving around the world. And picking the right stable, managing the right chain, handling the keys, executing the risk scoring, doing the audit, all of those things. AI actors are perfectly capable of doing those things with humans in the loop for certain escalations. And so that piece of crypto is incredibly helpful to what we're attempting to build out.
Absolutely. Fantastic. Sean, I'm sure we have just scratched the surface. I'm positive I didn't ask you all the questions, and I'm sure someone's like, I wish you would have guessed something differently, but always happens. Is there a good way of connecting to learn more or ask you a follow-up or just follow up on something you mentioned on the show?
Of course. So we're at catenalabs.com, but you can also find me directly on X, PS Neville. My first name is Patrick. So Patrick Sean, PS, good Irish name. Neville, and those are probably the best ways to reach out. And I love chit-chatting about this stuff, so I'm happy to have conversations. And naturally, if you have follow-up questions, feel free to reach out on those too. I am absolutely obsessed with this space and what we're building, and so really enjoy talking about it, especially with people who have contrarian views. So I can learn.
I love it. Sean, thank you for the time. I really do appreciate it.
Thank you so much.
Absolutely. All right, that's it for the episode. Be back again, different guest, different topic. Until then, two things. One, great conversation. Sean walked us through the notion of AI economics and how these workflows will get paid at some point to do stuff on behalf of other businesses or consumers. And we talked about some of the trust components, stablecoin, where that fits in. We talked about accountability, covered a lot of ground. If somebody else is interested in this topic, please share this episode with them. Also, like, subscribe, comment, let me know how the show's going for you. Until next time, thank you and goodbye.